Welcome back to Fortress Education. This is Zed. Today, we're talking about LICY, going with the ticker LICY. In this video, we're going to go towards due diligence, technical analysis, and what I think about this one. So without further ado, let's jump right into this one. So this company really implies from the name that it's a lithium-ion battery recycling company. They're going after sustainable processes for recovery of critical materials from all type of lithium-ion batteries. Let's start off with their foundation. It was founded in 2016 after recognizing the importance of creating a more efficient and sustainable recovery process for critical battery materials from spent lithium-ion batteries. In 2017, they started a mini pilot where they were recycling around 50 tons per year as a first mini pilot in Canada. And in 2018, they demonstrated the spoke and hub in Kingston, Ontario, Canada as a part of their LICY's operation. And in 2019, they had the commercial spoke 1. So in July itself, 2019, LICY Commercial Spoke 1 was fully commissioned with the capacity to process 2,500 tons of lithium-ion batteries per year. Later on in the year after, in May 2020, they upgraded Commercial Spoke 1 to process 5,000 tons of lithium-ion batteries per year. And in 2020, Commercial 2 or Commercial Spoke 2 opened and is commercially available to process a capacity of around 5,000 tons per lithium-ion batteries per year at Eastman's Business Park in New York State. And currently coming up in 2022, Commercial Spoke 3 in early 2022, it's expected that it would be open up in Arizona with the capacity to recycle around 10,000 tons of lithium-ion batteries per year. In 2023, and early of that, the North American hub will be operational in Rochester, New York, with the capacity to recover battery-grade materials from an equivalent of 60,000 tons of lithium-ion batteries per year. Now, again, going on to how much they've gone already, so they recover again critical materials from lithium-ion batteries and reintroduce them back into the supply chain. Annually, they have around 460,000 tons of lithium-ion batteries, reaching the end of its life globally by 2020, and 1.7 million tons cumulative of lithium-ion batteries estimated reaching the end of life globally by 2020, and around 15 million tons of cumulatively of lithium-ion batteries estimated to reach their end of lifetime or end of life globally by 2030. And so they really are trying to go ahead with this process as a solution to the problem that we do have. Now, we can go ahead quickly towards their presentation. This was actually put up in September 2021, so earlier this month. And again, they're trying to go for a sustainable pure play here. The pace of new battery manufacturing facilities is far exceeding our expectations. Around 5 to 10% of lithium-ion batteries manufacturing volumes are typically rejected and are available for recycling. And recycling volumes are growing in lockstep with the manufacturing volumes well in advance of the end-of-life tsunami. And LICY is an industry-leading lithium-ion battery recycling company. They're leveraging proven technology and commercial leadership. Today, North America's leading lithium-ion battery recycler with the most efficient and sustainable purpose-built technology. They have around 10,000 ton per year LIB equivalent spoke capacity operational today, and up to an additional 15 to 20,000 ton per year LIB equivalent spoke capacity announced and in progress. Around 60,000 ton per year LIB equivalent input hub capacity in Rochester, New York. And in the future, they have a global network of more than 10,000 tons per year LIB equivalent in spoke capacity, with deploying spokes close to battery manufacturing, scrap, and after-sales sources. Centralized network of around 220 to 240,000 ton per year LIB equivalent input hub capacity. And so accelerating macro tailwinds, so heightened battery recycling regulations in US, California, and in Canada, Ontario, both of them, and actually even China and Europe, all of them have heightened recycling regulations that would require recovery rates of up to 100% in California, 80% in China, and 70% in Ontario, Canada. And they also have continued battery production capacity, projected scrap volume of growth in general, and with accelerated electrification, they anticipate that the need of this would continuously grow. With lithium cycle closing the loop on manufacturing scrap and end-of-life batteries, EOL batteries, you're able to see that it goes all the way from mining and refining all the way to end of life, and then goes back into recycling through patent and spoke mechanical to patent and hub, and back into just materials such as nickel sulfate, lithium carbonate, magnesium carbonate, and cobalt sulfate. In addition to shredded copper and aluminum, and mixed plastics. Now, lithium cycles technology's advantage is that it recycles up to 95% as an efficacy rate or efficiency rate. And you're able to see that in general they're trying to close the loop. So some of the advantages includes high recovery rates and inherently low cost operations, non-pyro technology protected by a robust IP moat, ability to scale efficiency with customers, agnostic to lithium-ion battery type, recovery of battery-grade products from the hub, and minimize environmental footprint. And you're able to see as well that the new battery mega factory deployment far exceeded the expectations in general, with tons of lithium-ion batteries available for recycling by region in 2025. And currently, they have outsized growth in North America battery factory projects, or just general projections here. You're able to see by 2025 estimates in every single point, including, for instance, Tesla. You're able to see that there is easily around close to 200 gigawatt hours of battery capacity. And moving on from there, you will have massive need for scrap projections, recycling, and lithium-ion cycles. So some of the fiscal quarter 3 2021 updates here, and the highlights includes fiscal quarter 3 operational performance is on track with expectations as they ramping significantly during the second half of 2021, with the pace of new announcements of battery mega factories far exceeding the initial expectation. Lithium Cycle will add a fourth North American-based spoke in Alabama, located near key battery manufacturing scrap sources. Rochester Hub is also on track with 14 new battery supply customers onboarding during the fiscal quarter 3 2021. And they're currently listed on the New York Stock Exchange, successfully completing its de-SPAC with $527 million of net proceeds and minimal redemptions. And going on from there, committed to their communities and support and everything in between. So I'm going to just move towards here. The gross revenues and net revenues in US $1 million. So the year-over-year net revenue growth is around 840%, which currently is leading to $1.7 million of net revenue compared to $0.2 million in the year before. Their net revenue growth of product sales, net revenue of $1.6 million, driven by increased Kingston and Rochester spoke processing. Also, you're able to see that the treatment charges, refining charges, and possibly marketing charges are typically incurred when selling black masses to third parties. And some of their outlooks into the second half, they're ramping up in Kingston Spoke and Rochester Spoke, and the Rochester Hub procurement to begin during fiscal year 2021, enabling LICY to continue on track with project execution, and Arizona Spoke procurement and construction to continue recently announced in Alabama, with full year growth of full year 2022 guidance to be reported in conjunction with the full year 2021 results. And you're able to see here that the spoke expansion updates includes from initially Kingston with the 5,000 ton per year, ending with the Alabama one, possibly 10,000 tons per year thereafter in 2023. And also another one in Arizona around 10,000 tons per year, also 2023 projections. And Rochester, New York is operational since end of 2020 or 2020 general, my bad, I'm used to say 2022 and 2021, and that one has 5,000 tons per year. So this kind of gives us an idea on everything in between. Just going quickly towards the appendix, we're able to see that currently in the 9 months ending July 30th or July 31st, the net loss is currently at $21 million compared to $4.8 million in 2020. 3 months ending July 31st, you're able to see that the current in this quarter, the net loss is around almost 7 million compared to almost 2 million net loss last year around the same time. Adjusted EBITDAs are looking worse, but here they mentioned something. LICY defines adjusted EBITDA as net earnings or earnings before depreciation and amortization, interest income or interest expenses, and everything in between on there. So they're still net negative in general, but net revenue is positive. So we already mentioned a lot of this here. The main thing that they do have is that the PIPE and SPAC transaction announced back in February 2021, and looking back into August 2021, that was already closed. So before moving on forward, if you would like to see more contents like this, make sure to click the subscribe button on the bottom right corner and leave notifications on. It helps my channel a lot more than you can ever think. Also, don't forget to drop a like to this video, and if you would like to join our Discord, totally free in the description below. Now on other things, such as news. So first off, in products, delivering value through recovered materials and process innovation. And mainly they have two things, the battery materials as black mass and mixed copper/aluminum. They also had the plastics ones in the presentation, but we already divided what these two really go into. And full service solution for recycling lithium-ion batteries. We did talk about the closed loop, logistics management, and secure destruction with add-on services as optional. Also, they have a unique and dependable approach to solving the global battery recycling problem. And I do recall, by the way, hearing about LICY back, I think, in 2019 as one of the startups. And I went back and I looked quickly into a search, and I did find this article here. And it says, heat map 5 top recycling or battery recycling startups. And I think around 3 of those, LICY comes as a significant one. I live here in Canada and Ontario, so I've heard about them before. And you're able to see here, they highlight, so the rise in high quality batteries is good as it weans humans away from fossil-based energy. However, with new technologies comes one problem, and high levels of battery waste generated becomes detrimental to the value that electric batteries have. Hydrometallurgical technology helps recycle important materials for batteries like lithium, manganese, cobalt, and nickel. This recycling process provides the best metal recovery and therefore facilitates reusing components of old battery. This economically viable technology provides affordable battery recycling solution across industries. Now, the LICY is a startup from Canada that uses a combination of mechanical size reduction and hydrometallurgical resources recovery techniques designed for recycling lithium-ion batteries. The company provides recycling technology for safely processing lithium-ion batteries. Now, we get that. And another thing here, this is the battery recycling search term. As you get to see, there is kind of an uptrend for the last 5 years in how the popularity in general for them. And lithium-ion battery recycling companies, that's a lot of researches in the last year or so. And there's a lot of interest for this technology in general. Now, as I lose my voice, I'll go quickly towards institutional buyers. And we do have 4 main massive owners for this one. First is the insiders. They got the first 2, Johnson Timothy and Questrade AJ. They're the founders. They're having 15.4 and 7.30%. Questrade AJ and Johnson Timothy respectively. And you got TechMet Limited having 7.95% and More Capital Management 7.9% of the entire company. On other parts, currently on the short shares interest, there's around 15,000 shares available for short selling. That's the ones that are available for borrowing. And the borrow rate on those are around 42%. As you get to see, there's a massive short selling activity going into this one. The volumes are usually lower onto this one, but you get to see that almost more than 60% on any given day is currently the average, and up to 80% of shares being traded at any given day is going towards the short selling side. Volumes are not that massive in general, but it's currently starting to pick a bit more attention. And if we were to look into the SEC filings, we're able to see again information about Alabama and an additional spoke hubs that we talked about earlier. And another thing is that the price over book for this one is around 235. If we were to look into the SP 500 price to book value, that is currently sitting around 4.77. So taking a look into that, currently it's trading at almost 50% of the SP 500 price over book value. Let's move on now towards technical analysis. Now, on the technical analysis point, I'm using TradingView today just to give you a bit of perspective on how to use this software in general. So currently it is trading down lower than the $10 pre-SPAC value in general, but we're able to see that momentum in general is picking up really nicely on the MACD and also on the Williams%R, which is very similar to the relative strength index. It's neither overbought or oversold. We're also starting to see that it's kind of curving upwards in this kind of momentum, almost showing you as a W kind of trend or pattern. So we can anticipate for it to jump backwards at least to closer to the levels of $10. Now on the Fibonacci retracement part, what we're able to see here is some key levels of resistance. Initially, 959, 1076, 1171, 1266, 1401, and 1573. The only support on the Fibonacci retracements is 769. However, we're able to see some key support levels. First off, 865 is a very critical support. Below there, 849 is an important one. Below there, it's the 798. Now on resistances, currently, we have another resistance at 889, above there, 909, and then it jumps a little to 954, and then up to 997, which is very close to the $10, and then 1065, and then above there, we're going around 1120, and then above there, you're looking into 1191, and then upwards to around 1243, going upwards to around 1303, 1387, around 1435, and around 1475, and then from there on around $15 and $16. Comes to the question to Ed, what do you think about this one? Well, for this stock, in theory, I do think that this is a company that will grow in general in the next 5 years or so. The demand on lithium-ion batteries is insane, and currently there is some technologies experimental, but by the time that kind of evolves, this company would most likely adapt for that kind of recycling of materials, unless we start going on with some very sustainable battery sources, and if history tells us that's probably not going to happen for the next 50 years or so. And so for this company, it has a lot of a really good position, a lot of capabilities to go forward and utilize on that, in my own opinion. And I do really think this company has a lot of potential and is a very interesting company in general. Now, for this company, it's still on the smaller side. It still has around a market cap of around $1.4, $1.5 billion. And can it capitalize and hit around, let's say, $10 to $15 billion in the next 5 years or so? I think that is very much of a possibility for a company that is literally going off after lithium-ion battery recycling. Now, there is a possibility for a competition. Let's say Tesla vertically integrates towards creating a battery recycling service on its own, and that would kind of cut down a little bit of their supply relating towards batteries recycled from, let's say, Tesla cars, which is currently quite a predominant EV manufacturing on itself. And they also make their own batteries, so that's something to consider. I mean, for Tesla, and if they were to go with that competition, that might hurt this company. But I do think this is a very interesting opportunity for me to take a look into this company and help hopefully give you more information onto this one in the future on some updates. But for currently, I am optimistic. I find this one interesting. It's a little bit of a risky play as a smaller company with only around 5 years of history, but it's coming in as a massive opportunity now with a hot market. But do expect offerings in the next 10 years or 5 years or so as they continue to grow as a fast way for them to generate assets. The question is, can they go ahead and provide a better income and a better net assets, net revenues, in general, net profits, in order to meet that kind of market cap around 1.5 billion. I do think so, it's possible, and I'm still kind of bullish onto this one. What do you think about this ticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day.